welcome to Weenie Trades. In this video, I'm going to be giving out the weekly game plan. I'm going to be quickly going over SPY, Bitcoin, and a few notable earnings. So I left my camera in the car. We're just going to roll without it, so it's nice and easy. So let's get right into the video. First up we've got is SPY. SPY over here, really good outsized week. This week, since we do have a lot of earnings reports, there could just be a lot of chop. But I am looking for a potential dip buy on SPY right about the 448, like 30. I did swing a little bit of a small short position. We'll see how SPY tends to open up on Monday. So that's kind of the SPY, just expecting a little bit of consolidation. Next up we've got is Bitcoin /BTC. And Bitcoin, boom, nice good new all-time high. I bought a little bit of the dip at 60K, but really I'm looking to lean into Bitcoin at about this 58K mark. And that would just be the former flag breakout area. So I'm looking for something like that on that dip buy. And that is for more so an investment more than a trade. I would like to buy a little bit more Bitcoin if we could get as low as something like $47,500. So that's just something to think about on Bitcoin. And if you don't own any crypto at all, I think it's pretty good to diversify just a little bit. If you want to diversify and you don't have a crypto portfolio yet, go ahead and check out Coinbase, link in the description. If you deposit $100 and trade $100 of crypto, we each get $10. So it supports the channel and it's a win-win-win. So check out Coinbase and let's get into the earnings releases. So right now, I'm going to touch up on these earnings that we're having this week. So we've got a lot of companies reporting. It's going to be a really exciting trading week. I think this is going to be a big P&L week this year because I trade earnings pretty well, at least after the report. So looking for it to day trade and maybe even swing trade most of these stocks after they report their earnings. So real quick, I'm going to be touching on the expected move. I might give a little fun prediction of what the earnings reaction might be. So for example, right here, 3M, it has an expected move of about plus or minus $7.50. And that's a decently big expected move for something like 3M. That's about a 5 to 6% move. And so, I think that's a slightly high expected move, meaning option sellers might have a little bit of an advantage ahead of earnings. But of course, anything can happen. That's just my opinion, which is what I'm going to be giving as I go down this list. And based on this chart pattern, I think 3M is having a bit of trouble executing, and I might be a little bit more bearish on 3M. So I might day trade after earnings, might be looking for a potential short setup on 3M. Next up we've got is UPS, and UPS, nice good little move higher, bull flag, pop. Okay, earnings, fair expected move. I'm looking to trade UPS after earnings. Next up we've got is Waste Management. Waste Management, all-time highs. I'd like a dip buy on Waste Management. This pays actually a pretty decent dividend. I'd like to get a dip buy at about the 157.70 level on Waste Management. And next up we got is AMD. AMD, I'm excited for this one. We could be breaking out into all-time highs. The expected move is decently high on it, about $8.50. I'd say that's about fair priced. I would like to get a dip buy on AMD at about the 108 level if we are coming down there, and that coincides with the edge of the expected move. So if there is a negative reaction, would like that dip buy. Otherwise, I have my leap option spreads if AMD wants to keep going. I am looking to day trade AMD after its earnings report, so be sure to check that out at Weenie Trades Live. Next up we got is Microsoft. Microsoft pricing in about a $10 expected move. It's hitting all-time highs in front of earnings. We could be doing a flag, looking for another move higher. Otherwise, I'm just looking to trade Microsoft after earnings. I don't think there's any edge really in any of these taking the trades before earnings. However, just interesting to see what the option chain is expecting. And for Google, the option chain is expecting about $125 expected move. That's a pretty big move. I don't know if Google can really go as high as 2,900 or even down as low as 2,600, maybe 2,625. So I do think Google has a high expected move. Again, would love to trade Google after earnings. I do think Google could probably go a little bit higher. They may not beat the analysts' estimates, but they might surprise and remind people, wow, Google makes a lot of money. So that's all on Tuesday. Next up we've got is Boeing, BA, and Boeing, fairly priced expected move based off the option chain. I am looking for a potential dip buy on Boeing if we can dip into the 180s. And I'm not saying that's going to happen this week, but that could happen in the next few months. And that could be a potential long-term value play. We'll see though. Time will tell, and we'll reevaluate at Weenie Trades Live. Next up we've got is KO, Coke, and Coke just kind of consolidating in this little range. This is a slightly potentially bullish setup. The expected move is only $1, and I think that that's actually low. Even though Coke is a slow mover, I do think that $1 might be a little bit low of an expected move. I guess it makes a little bit of sense, but I think they only bumped up the implied volatility by like 25 to 50 cents. When really they should, I'm expecting something like $1 or $2 on Coke. So could be buying options on Coke, maybe a call option on Coke. Yeah, I don't know. Even then, it looks enticing, but Coke might just not do anything. Coke's not a really big mover, but an interesting place to park your money, 42 cents a share, and relative stability compared to other things in the stock market. Next up we've got is Spotify, and Spotify, $20 expected move. That looks pretty fair. I'll be looking to trade Spotify after earnings. So Spotify, pretty interesting, and this is on Wednesday, I believe. We've got Ford. Ford only has a $1 expected move. I do think that that is a little bit low. So Ford, I'd like a little bit more of a dip buy maybe on Ford at about the 15 level, but we'll see how Ford, what the volume might come in on Ford in the future. Next up we've got is UPWK, Upwork, and Upwork, look at this one. I actually kind of like this setup. We've got a flagpole, move higher, a bull flag. Can we continue this higher? Question mark. The expected move is decently high. It is $9.50. I do think that that is accurately priced, and that's just because of the price of Upwork. If Upwork was a little bit higher priced stock, I'd say that's a low expected move, but Upwork, about fairly priced. I'm looking to probably trade Upwork after earnings. So that is all on Wednesday. And then on Thursday, we've got Shopify. Shopify, they make quite a bit of money, but yeah, I'm looking to trade it after the earnings report. They have about a $100 expected move, so $15.25 on the upside for Shopify and maybe $13.25 on the downside. I'd say if Shopify is coming on down, it could probably break down even a little bit further down to the $12.50 level, but that's only if it breaks down. We'll see how it reacts. Otherwise, I don't expect Shopify to really bust through all-time highs. There's a lot of muck up here with this nasty witch type head and shoulders pattern. It's definitely spooky season for Shopify, but we'll see if this earnings report gives it some momentum. That could be enough to blow through all this crap over here. Otherwise, yeah, Shopify probably just going to stay with inside the expected move. Next up we've got is Apple. And Apple, yeah, $5 expected move. I'm a slight little bear on Apple short term for this report, just on the reaction. We might come down to the 145. Basically, I'm saying I wouldn't expect Apple to bust through all-time highs. It could, it's just fun to make a little prediction. I'm not going to trade off of that. I'd love to trade Apple after the earnings report and use that volume for great trades to set up. Next up we got is Amazon, and Amazon expected move $150. That's about a fair expected move, so not super high, not super low. I don't know if Amazon breaks the support down here at 3,200. We do have lower highs and a flat bottom. It's not good that Amazon gave up that on Friday. Amazon blew past the expected move. So ironically, this was 2 Fridays ago, and that was the day where like $20 turned into $5,000. It was a little bit more, but let's just say it's about that. And on this day, it was about $40, turned into $4,000. So it kind of undid the exact same move. It gave everybody a chance to make money. So congratulations to Amazon, but I think that's a fair expected move. Definitely looking to day trade Amazon after earnings. Next up we got is XOM, ExxonMobil, only like a $2 expected move. I think that is low. I might buy a call on XOM one ahead of earnings, and then I'll just trade it after earnings. But XOM, nice good flag setup. I think that XOM we could see potentially the $70 a share, maybe even by the end of the week. We shall see though. So that covers the earnings and just potential ideas and maybe even trade setups afterwards. Next up, I'm going to be breaking down some stocks from our Weenie Trades Discord Academy. And boy, we've got Tesla, and Tesla over here, boy, what a great week. Tesla, ascending triangle, ahead of earnings, we take a lot of profits. And boy, through earnings, Tesla, we killed it trading Tesla last week. And now on Tesla, I'd say I'm just looking for a little bit of sideways action, maybe just a little bit of chart vibration. Again, still looking for that dip buy at the 875, just for a short-term trade. For a longer-term trade, if you miss the breakout from 805, say there's some big market weakness, I think the dip buy on Tesla is now 805, and that'll just be a healthy retracement from the highs. That's over a multi-month time frame. I don't think Tesla's coming down to 805. I think Tesla's probably going to go sideways for a bit and then start to grind on higher. But that's just an opinion. It's super fun to trade Tesla and other stocks after earnings because look, you got the high volume, you got great price expansion, and that's exactly what we're looking for on Tesla and on just stocks in general. So Tesla over here, just expecting some sideways action. Maybe if it's selling off into support, put credit spreads might be the way to make money off of Tesla. So that's just my take and stance on Tesla. Next up we got is Nvidia. Nvidia just made new all-time highs, pulled back just a little bit. Nice little doji candle. I'm expecting Nvidia to go sideways to slightly lower first, but I would be looking for the dip buy, ideally around the 220 area, maybe something like a spike of it, 219 might be the dip buy for Nvidia. I'm bullish on Nvidia, expecting sideways to slightly higher. We'll see how they do after reporting earnings, but letting it sell off and then maybe put credit spreads. If it's just blasting through early in the week, I might only stick to it for a day trade, but my attention might be somewhere else. So yeah, day trading only if it keeps on going, because at any point, the swing trade could catch a big gap down if you're too extended off of the nice good support. So that is Nvidia. Next up, we got a CCL, and CCL did do that little bear flag breakdown. Drop, base, support, support, support. Eventually the buyers run out. We break support, and hey, we found some support at this support right here at 21.95. Did I say support enough for you? Hopefully I did. But basically I'm saying, CCL, I wouldn't want to be bearish anymore. We've already made the drop. It's probably going to try and maybe put in a rounded bottom. We'll see. CCL, yeah, if it's above 22, this could be a potential low. If it comes underneath 22, I would just expect CCL to chop around and zigzag and go sideways to slightly lower. CCL, I'm not too interested in trading or investing in it. Maybe if we come down into something like the 13 or 14 level, and that seems crazy, that's 40% away. I got to be picky with something like CCL. So that's CCL. Next up we've got is Mark, M-A-R-K. And Mark, big day on Friday, big volume spike, 138%. These are not my style of stocks. They can drop crazily. Look at that, 26% in just a few short minutes. So yeah, I'd be careful on this one. But short term, it's bullish as long as it's above 2. And maybe even more bullish if it's above 2.43. Next up we got is Workhorse, WKHS. And Workhorse over here, getting clapped. Absolutely clapped. And if you guys were following the stream many months ago, I was like, why don't you short Workhorse? Why would you short Disney? And that very same day, Workhorse just absolutely tanked. Workhorse not looking too good, and it's just been making lower highs and lower lows. And this is why we have stop losses. We don't care if the stock is not going our way. We got to get out, right? Why does Workhorse have to be the one that makes you all your money back if you're down on Workhorse? We want to be a Workhorse. We don't want to own the Workhorse stock. Although I am looking for a potential dip buy on Workhorse at 5.34, and that's kind of like a line in the sand low from this recent pivot and recent breakout area. So 5.34, that could be a potential low for Workhorse, but we shall see. If we break above 6.74, then there's a chance for a potential rally on Workhorse. Oh, and by the way, if you're a part of the course, be sure to check out the updated and revised content. There's a lot of cool stuff that I can do with these courses, and I love updating and adding to them so I can give the most value possible. And if you're not a part of the course and you want your stocks broken down on Sundays, and you just want a great reference point and you like the way that I teach things, then hey, this course might be a pretty good fit for you. Use code SPOOKY in the description, and that expires at the end of the month. Thanks for tuning in. See ya.